Hello guys, welcome back to another learning video, and in today's video we will be discussing on how to apply an option selling strategy in Bitcoin named as a strangle, and it means that your view on Bitcoin is sideways up to a certain period. The period can be the expiries available to us in Delta Exchange platform. Let's move to the platform. If you want to do option selling, please use Delta Exchange platform. It is an FIU registered platform. The link is given in the description for account opening. Okay, friends, let's discuss about this platform. When you go over to the options tab, then you will select the underlying you want to do option selling in. Like I want to do option selling in Bitcoin, then I will select Bitcoin. Now we should discuss what a strangle is and what a strangle consists of. Actually, a strangle consists of a two-leg strategy. One leg is a call option and another leg is a put option. And if market remain between this leg, this call and put option, you will be uh, profitable. And this strategy is called a strangle if your view on Bitcoin is sideways. This strategy can be applied on the various expiries available to us in Delta Exchange platform. For example, these are the daily expiries and these are the weekly and monthly expiries. These are the weekly expiries and these are the monthly expiries available to us on Delta Exchange platform. Okay, friends, this was a slight introduction. So if I will start giving you an example on how to make a strangle by just moving on to the Bitcoin's chart. Okay, this is the Bitcoin charts, and I usually do my analysis on 4 hour time frame. And for example, I am just giving an example. If I want to do an strangle on the monthly expiry, so what would be my analysis and what would the which call and which put option I would sell. For example, my view on Bitcoin that is that Bitcoin will remain below this level, which is 1,17,000 on the upper side, and above this level, which is 1,77,000 on the lower side until the end of this month. So I will sell a of uh, around call option of around 1,17,000 and put option of around 1,07,000. Let's move on to the trading panel and form a strategy. First, we have to check that is the strategy builder tab is on. Okay, friends. Now we have to select the expiry. This month expiry is 26th September's expiry. Okay, friends. Now I want to select 1,17,000, which is trading at around 1,100. We will put the price at 1,100. Okay, friends. And similarly, we will scroll down and select another call option, which is 1,17,000, which is trading at around 1,500. Around 1,500, we will just, I am giving you an example and selecting the price. Okay, friends. Now you should, if I am doing for 100 lots, and you should analyze payoff also, you will get around $260 if you sell and a strangle of around 1,17,000 on the upper side and 1,07,000 on the lower side. Okay, friends. The amount which will be used, the margin will be used at will be around $225 at 100x leverage we have selected. Okay, friends, and this is a handsome return as $259 is an handsome return and more than 100% return and will allow us to make a strangle. And upper range will be upper range, you can see the break even also, that 1,19,599 on the upper hand side and 1,04,400 in the lower hand side, and this is until expiry, and you will get a big range. The Bitcoin will get a big range and you will get a big range to trade in, and the market will remain under this range. There is a high probability, if there is a high probability, the market will remain under this range. The target dates for of your choice, for example, if I am selecting 9 September, then I would suffer loss of around $50. This was reduced as the days passed. As the days passes, from around 12 September, if the market remains at the current price, then I will be at a $1 profit. So this would vary when the day of expiry comes near, and you should always check the payoff graph according to your price action reading. Will Bitcoin remain in this level or not? if Bitcoin becomes volatile, then you can suffer a notional loss of very high values. But I prefer only to sell options by using stop loss and proper risk to reward. You should follow these three rules if you are selling an option. What are these three rules? Avoid free legs. If you are making a strangle, I know that there is you have made a very good analysis, on your analysis is very perfect, and you will the market will remain under this range. But what happens if market moves in this way in a very fewer time? If market becomes volatile, then you will suffer, you will see a loss in your portfolio. Rather, market remains at the end of the month within this range, but you will suffer loss. Don't want you guys to have such a scenario. So you should always put a stop loss on premium of your choice, because if you regularly make profit out of this triangle strategy around 8 out of 10 times, but when the 2 times arrives, you will suffer loss which you will not recover in next 20 trades, which is a very bad risk to reward. So you should always follow risk to reward, proper risk to reward, and proper stop loss. I am just giving you an example. uh, if my selling price is at around 1500, so I will put a stop loss of around 3000 on the upper leg. This is 1:1 risk to reward. Okay friends, and this works perfectly in most of the scenario, and that is why I'm giving you example of this particular stop loss. Okay friends, and same in the similar way, if I am trading, if I am selling this put at around 1100, then I'm putting a stop loss of around 2200, which is also 1:1 risk to reward. So this is a very good risk to reward, and if market becomes volatile, don't worry, let your legs exit, and don't worry, and there will be opportunities arriving every month, every week, every day there is an opportunity. So don't worry, take a stop loss on exit, and only form this particular strategy if your strong view is present. For example, if your view is for monthly expiry, then form this strangle for the monthly month. And if your view is for weekly expiry, then select weekly expiry and do a strangle. And if your view is for a day or 2 day, then form a strangle on daily expiry. But your view should be clear for until how long the market will remain sideways up according to your analysis. Okay friends, this is a very important point. So you have to follow these rules proper, avoid free legs, and proper stop loss or premium uh, should be set beforehand, and risk to reward should be maintained, which is very good 1:1 risk to reward. And this triangle strategy works very. You should always follow these rules while making a strangle or while doing an option set, because this will help you to certain ascertain your loss beforehand, and you will know what the amount you will lose in a particular trade, which is very important for a trader, and which is very important to consistently make profit. Because the one day you will make a big loss, unknown loss is very dangerous for your portfolio, and you will never grow out of it. So it is very important that you know your loss before you take an important point. Please also join my telegram group, as I continuously post that option selling trades which I take from my personal account. So this will be very helpful for you. And also join my YouTube channel, as I continuously post videos on Bitcoin option sellings, which would be very helpful for you. And also, if there are any queries related to this video, or if you want any other video, please mention it in the comment section. And don't miss the video coming up in the end screen. Thank you friends.